والأرواح لك منا كل حمد في مساء وصباح هب لنا منك رشدا واهدنا سبل الصلاح إن تقوى الله نور وطريق للفلاح باسمك اللهم ندعو في هدوء ورواح لك منا كل حمد في مساء وصباح هب لنا منك رشدا واهدنا سبل الصلاح إن تقوى الله نور وطريق للفلاح باسمك اللهم ندعو في هدوء ورواح لك منا كل حمد في مساء وصباح هب لنا منك رشدا واهدنا سبل الصلاح إن تقوى الله نور وطريق للفلاح باسمك اللهم ندعو في هدوء ورواح لك منا كل حمد في مساء وصباح هب لنا منك رشدا واهدنا سبل الصلاح إن تقوى الله نور وطريق للفلاح باسمك اللهم ندعو في هدوء ورواح لك منا كل حمد في مساء وصباح هب لنا منك رشدا واهدنا سبل الصلاح إن تقوى الله نور وطريق للفلاح باسمك اللهم ندعو في هدوء ورواح لك منا كل حمد في مساء وصباح هب لنا منك رشدا واهدنا سبل الصلاح إن تقوى الله نور وطريق للفلاح باسمك اللهم ندعو في هدوء ورواح لك منا كل حمد في مساء وصباح هب لنا منك رشدا واهدنا سبل الصلاح إن تقوى الله نور وطريق للفلاح باسمك اللهم ندعو في هدوء ورواح لك منا كل حمد في مساء وصباح هب لنا منك رشدا واهدنا سبل الصلاح إن تقوى الله نور وطريق للفلاح باسمك اللهم ندعو في هدوء ورواح لك منا كل حمد في مساء وصباح هب لنا منك رشدا واهدنا سبل الصلاح إن تقوى الله نور وطريق للفلاح باسمك اللهم ندعو في غدو ورواح، لك منا كل حمد في مساء وصباح. هب لنا منك رشدا واهدنا سبل الصلاح، إن تقوى الله نور وطريق للفلاح. باسمك اللهم ندعو في غدو ورواح، لك منا كل حمد في مساء وصباح. هب لنا منك رشدا واهدنا سبل الصلاح، إن تقوى الله نور وطريق للفلاح. باسمك اللهم ندعو في غدو ورواح، لك منا كل حمد في مساء وصباح. هب لنا منك رشدا واهدنا سبل الصلاح، إن تقوى الله نور وطريق للفلاح. باسمك اللهم ندعو في غدو ورواح، لك منا كل حمد في مساء وصباح. هب لنا منك رشدا واهدنا سبل الصلاح، إن تقوى الله نور وطريق للفلاح. باسمك اللهم ندعو في غدو ورواح، لك منا كل حمد في مساء وصباح. هب لنا منك رشدا واهدنا سبل الصلاح، إن تقوى الله نور وطريق للفلاح. باسمك اللهم ندعو في غدو ورواح، لك منا كل حمد في مساء وصباح. هب لنا منك رشدا واهدنا سبل الصلاح، إن تقوى الله نور وطريق للفلاح. باسمك اللهم ندعو في غدو ورواح، لك منا كل حمد في مساء وصباح. هب لنا منك رشدا واهدنا سبل الصلاح، إن تقوى الله نور وطريق للفلاح. باسمك اللهم ندعو في غدو ورواح، لك منا كل حمد في مساء وصباح. هب لنا منك رشدا واهدنا سبل الصلاح، إن تقوى الله نور وطريق للفلاح. باسمك اللهم ندعو في غدو ورواح، لك منا كل حمد في مساء وصباح. هب لنا منك رشدا واهدنا سبل الصلاح، إن تقوى اللهم ندعو في غدو ورواح لك منا كل حمد في مساء وصباح هب لنا منك رشدا واهدنا سبل الصلاح إن تقوى الله نور وطريق للفلاح باسمك اللهم ندعو في غدو ورواح لك منا كل حمد في مساء وصباح هب لنا منك رشدا واهدنا سبل الصلاح إن تقوى الله نور وطريق للفلاح باسمك اللهم ندعو في غدو ورواح لك منا كل حمد في مساء وصباح هب لنا منك رشدا واهدنا سبل الصلاح إن تقوى الله نور وطريق للفلاح باسمك اللهم ندعو في غدو ورواح لك منا كل حمد في مساء وصباح هب لنا منك رشدا واهدنا سبل الصلاح إن تقوى الله نور وطريق للفلاح باسمك اللهم ندعو في غدو ورواح لك منا كل حمد في مساء وصباح هب لنا منك رشدا واهدنا سبل الصلاح إن تقوى الله نور وطريق للفلاح باسمك اللهم ندعو في غدو ورواح لك منا كل حمد في مساء وصباح هب لنا منك رشدا واهدنا سبل الصلاح إن تقوى الله نور وطريق للفلاح باسمك اللهم ندعو في غدو ورواح لك منا كل حمد في مساء وصباح هب لنا منك رشدا واهدنا سبل الصلاح إن تقوى الله نور وطريق للفلاح باسمك اللهم ندعو في غدو ورواح لك منا كل حمد في مساء وصباح هب لنا منك رشدا واهدنا سبل الصلاح إن تقوى الله نور وطريق للفلاح باسمك اللهم ندعو في غدو ورواح لك منا كل حمد في مساء وصباح هب لنا منك رشدا واهدنا سبل الصلاح إن تقوى الله نور
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Distinguished guests, esteemed colleagues and participants, welcome to today's IABF discussion series on navigating compliance challenges for an Islamic digital bank, the experience of AEON Bank. We
AEON
are
Bank.
we are honored to have you to join us for this insightful session today. On this blessed day of Jum'ah, let us first seek the blessings for our gathering with the recitation of Al-Fatiha. Bismillahirrahmanirrahim. Alhamdulillahi Rabbil Alameen. Ar-Rahmanir-Rahim. Maliki Yawmiddin. إياك نعبد وإياك نستعين اهدنا الصراط المستقيم صراط الذين أنعمت عليهم غير المغضوب عليهم ولا الضالين آمين. I am Dr. Said Marwan. I am an assistant professor at the IIUM Institute of Islamic Banking and Finance. And inshallah, I will be the moderator for today's discussion. Before I introduce the speaker, please allow me to give a bit of a background on the topic. When we look at this topic, basically we go back to the financial landscape in Malaysia, which is undergoing quite a significant transformation with the advent of digital banks. Currently, we have 5 digital banking licenses that has been approved by the central bank, and the country has witnessed quite a number of launches of digital banks in 2024, and more recently, I think AEON Bank as well has been launched. What's more interesting, I think, is that these digital banks are also mandated to enhance financial inclusion by offering accessible and innovative banking solutions to the underserved and unserved communities. So, the introduction of these digital banks is also expected to intensify competition within the banking sector. And hopefully, this can drive further innovation and improve services. And it also brings some challenges, especially for digital banks, particularly in differentiating themselves in a market where, for me, I think that it is already quite established with the conventional banks that are also rapidly advancing their digital capabilities. So the ability of these new digital banks, new entrants, to offer unique value propositions and navigate regulatory requirements, I think will be very crucial to their success. And as a lecturer teaching Islamic finance, I have been closely monitoring these developments. And just to share with the speaker and the audience, I was also approached by a conglomerate that was seeking consultation with their application during that time for the digital banking license quite some time ago. So during this process, it has deepened my interest in understanding how these new banks will compete with established players, especially concerning compliance challenges and also the mandate that the central bank has given to them. So I think it's very appropriate for today's discussion that we have invited our esteemed speaker to share his experience in the sector. And therefore, it is my pleasure to introduce our speaker for today, Mr. Asharul Huzairi Muhammad Mansour, the Chief Compliance Officer at AEON Bank. Assalamualaikum, Mr. Asharul.
Waalaikumsalam warahmatullah.
Mr. Asharul is quite new to AEON Bank. I think he joined in March 2024, but nonetheless, he is an otai in the industry. He has experience of 29 years in the banking, investment, Sharia compliance, and and he has a lot of experience with different roles, including head of product development, head of compliance at Hong Leong Islamic Bank, and he has also contributed his expertise at Bursa and various financial institutions and technology companies. And Mr. Asharul holds a bachelor in economics from AEON, so he's also our alumni, and has been awarded the Chartered Professional in Islamic Finance by Chartered Institute of Islamic Finance. And he also possesses an advanced certification in compliance from the International Compliance Association from University of Manchester, UK. So today, inshallah, Mr. Asharul will share his insights on compliance challenges that is faced by, I think it's not only AEON Bank, but also Islamic digital banks in general. But of course, he will focus on AEON Bank. And he will share with us the challenges, including in terms of regulatory, financial, compliance assurance, Sharia review. And I think AEON Bank is also quite unique in the sense that when I compare with other digital banks that have been launched, they already have existing customer base. And for AEON Bank, it is, I think it's a very new, and we are keen to learn about how they navigate these challenges and how they try to compete effectively in the market. And I think I don't want to talk too much anymore. With that, I think I would like to pass the screen to Mr. Asharul to share his experience, inshallah. But before that, I just want to mention that we will have Q&A depending on the time and also depending on the suitability. I think Mr. Asharul can prompt whether he wants to open the Q&A during the presentation or at the end of the session later. So if you have any questions, what I would recommend is to write down the questions first, and maybe you can signal in the chat by raising the hand. I think there's a function there, raising the hand, and inshallah we'll try to address your questions during the session, inshallah. So with that, Mr. Asharul, the screen is yours.
Bismillahirrahmanirrahim. Alhamdulillah rabbil alamin wassalatu wassalamu ala asyrafil anbiya wal mursalin wa ala alihi wa sahbihi ajma'in. Assalamualaikum warahmatullahi, and very good afternoon everyone. First and foremost, thank you very much to our Mr. Moderator, Dr. Said Marwan, also to IIBF for giving us this opportunity to basically do a little bit of sharing of what has happened, in the digital banking landscape, as well as how AEON Bank basically maneuver through all this. First and foremost, I think let me test whether you can listen to me quite okay, volume wise.
Yeah, your voice is clear.
Okay, because now it's raining outside at my place, so I'm worried that the sound of the rain will basically disturb the volume and the voice. Okay, since that is fine, I think let me just start off. Before that, Dr. Marwan, are you able to present the slide instead of me?
Let me try. Yeah, I'll try
because
to.
I'm using the office laptop, so a little bit of security, of course, being in a bank. We cannot
Okay,
really
okay.
share. We use normally Google Meet, not this Zoom.
Alright, I have this. Yeah, can you see it?
Yes, okay. So
Alright.
can everybody see?
Yes, can.
Okay, thank you. So, well, the topic for today, basically discussion and sharing, is navigating compliance challenges. Obviously, because they see me as taking charge of compliance at AEON Bank, that's why the topic can be as compliance. But anyway, Sharia has been, very close to my heart since the beginning of my career, and I actually joined AEON Bank in 2023. So basically, it's just past 2 years here in AEON Bank. We launched the bank last year in May. So basically, we are just barely 1 year old. So two things that I want to first highlight. Number one is, if talking about sharing session, normally, especially when talk about a new setup or rather like a new organization, we basically it's better for us to have a more insight and more things to share once we have run probably 18 months and above, because at that point of time then we can have all the data in, we have all the real operational challenges that we can share and how we overcome them. But since this is barely 1 year old company, belum setahun jagung lagi pun, so I think the sharing that I'm going to do is basically only on the things that I'm able to share from the perspective of compliance, as well as maybe a little bit here and there in terms of what other digital banks are also facing. So let's move to the first one. The next page. Okay, these are just what I intend to go through. A bit of background, and then I'll go and zoom into the relevant sections under compliance. So normally under incumbent banks or the industry players out there, these are the common one. You have regulatory compliance and also some form of advisory, compliance advisory embedded within it. Then we have financial crime compliance. Financial crime compliance basically focuses on AML compliance, terrorism financing, countering of terrorism financing, proliferation financing, fraudsters, scammers, and so on. Next one is one of the most important part of compliance, which is the review side. Under us, we call it as compliance assurance and Sharia review. And finally, look at the part where I put it as very important appendix. I believe Dr. Marwan has not shared the slide yet with everyone. So you can see that basically that part is where a little bit of marketing, of course, but I just want to zoom to one important agenda or message from me to all the audience for today. Okay, let's go into the digital banking, the next slide. Right. So why is so pinky? So basically the color is our marketing color. This is not pink, to the surprise of some of you maybe. This is what we call as Nolta Genta. So the color is basically patented. It's only for us. The code is not for anyone else to use. And if you look really closely, of course, from the screen, you can see a little bit different. But if you see live, the color at our office premises, for example, you can see that the color is between a hot pink and also some sort of grayish, what do you call it, color. It's not really pink in that sense. Okay, first and foremost, I would like to just brief you or give a little bit of background on what digital banks are. So I think you all are very familiar with traditional banks, right? The normal banks, the branches and so on. So under the policy document, it stated that digital banks, in this case, I want to focus on Islamic digital banks, means that the business of what is defined in Section 2, Subsection 1 of IFSA, Islamic Financial Services Act, which is business which is carried wholly or almost wholly through digital or electronic means. So you see there are two parts there, wholly or almost wholly. So wholly is pretty much easy to understand. Wholly would means that it's everything via online or everything via digital channel. So this means like mobile applications, your web browsers, internet. But we also have that leeway by the regulator to say that it is also almost wholly. So it means that more than half, or that I take it as majority. Why we can have this is because when you talk about onboarding of individual customers, it's like straight through. STP is very easy to get the customer to basically sign up and also get all the information, verification, and so on. But when we move on later on, as I explain further in the details slide, when we move on to organizations, entities like SMEs or micro SMEs to be exact in terms of our target market. So you can see that there are areas whereby this customer will have to, have some manual intervention. When they upload the documents, for example, to us in a financing application, when they upload, then if the documents are all okay, genuine and all not and whatnot, it goes through very fast and it goes through via the STP. So no intervention at all. So that's the holy part. But the almost, or rather some form of intervention is where that particular documents are not genuine, for example, or there are some issues with the documents. So that is where some back office staff under operations will have to go in and check the documents, and even up to the extent of calling back customers to basically get the documents intended for that particular application. So that's why it is stated as almost wholly. Okay. Now, the other part of it is the second one. Digital banks are designed to improve accessibility to financial services and promote economic growth and drive financial inclusion. As what we mentioned with Dr. Marwan earlier on, two parts of it that I want to stress. One is accessibility to financial services, and the second one is drive financial inclusion. We are not saying that the incumbent banks are not doing this. It's not to say that they have failed in doing this. But the idea of having a digital bank is basically to make it easier for accessibility to financial services by all walks of life, everyone. Okay. And this means that the agenda of financial inclusion will be met further and will be spearheaded more by the digital banks. We can see that then there are some banks which are basically driving this as well. But when we have a group of banks, meaning the digital banks, having their access to customers by way of a mobile phone, so that really helped, and that is one of the ideas why basically this particular agenda is high on every list of digital bank. Now, go on to the second part of the sentence, particularly among underserved and unserved communities in Malaysia. So when you talk about underserved community or unserved communities, some other occasions you can see in your readings, in your research, they use the word of unbanked and underbanked. So to my opinion, this can be used interchangeably, whether it's underserved or unbanked, or whether it's unserved or unbanked. So we can use that interchangeably for that purpose. So the main important part of this is to really understand the definition of what is really this group, what we call as underserved, and who are really those who are unserved. So let me go to the first one, underserved. So underserved can be people who are, say, for example, living in the rural areas, for example, uh, difficult to access financial services, maybe incapable of going to the physical branch of a bank, maybe because also of their demographics, because of their age factor, for example, that they become underserved. And the unserved section, or rather the unbanked section, is basically talking about those who really, really don't have any access to the financial services. So these are among the general views or general definition that we have, because when we want to chart a program or a plan for them, for us to be able to onboard all this kind of group of customers, then we need to really understand the definition first. Some definition by other banks that I've seen also, they say that this particular underserved includes micro SMEs, for example. In terms of financial capability, they talk about the B40s, okay? And potentially also they say it may include groups like immigrants or refugees. This is something that need to be thought of as well very thoroughly, because there are other challenges for us to onboard this kind of this group of people. Okay. Now we go to the next part. The emergence of digital banks in Malaysia is direct response to increasing demand of seamless, efficient, and cost-effective banking solutions. So we are supposed to use the latest cutting of technology. We are supposed to use AI, real-time analytics, providing 24/7 customer service support to enhance the banking experience of all the customers. And also, when we eliminate the geographical barriers, then this will basically reduce transaction costs. So one of the aims of the regulator is basically to have banking at the cheapest price. So this is, of course, the aim of many banks or the incumbent banks, but really, really for digital banks, we are not supposed to basically charge fees, or what more if it is higher than what the incumbent banks are charging. So the idea is to provide a seamless experience for the customers, products which are more catered to the needs of the underserved and the unserved market, as well as the cost-wise should be cheaper than the what the market is offering. Okay, can move to the next one. So, in general, statistics are showing that at least in the Southeast Asian region alone, there are about 400 million adults who do not have a bank account. So these are the these are the unbanked or the unserved section. In Malaysia alone, we have about 14%, 14 to 15% Malaysian adult populations that are really unbanked or unserved. And about 41% of them of the underserved or the underbanked group. Okay. Now, the next thing that what digital banks can offer is in terms of better products. So normally when we talk about the underserved and the unserved segment just now, we talk about a B40s, for example. Why we need to cater for B40s is because they are one of the group under the underserved or the underbanked communities. But really, if you look at it in terms of our experience after we have launched close to a year now, we can see that the segment for B40s or those who are really underserved are those coming from the asset side, meaning from the financing side of the products. When we come to the deposit side or the liability side of the bank, we don't really care. You know, what I mean by we don't really care is that we don't segregate when we want to do campaigns or plans only for those B40s, because the ones with money basically are those not in the B40s rightfully. They are whether at the M40s or even the T20s. So when we have that kind of segregation, then we understand that basically we're really helping out, you know, those people who are really in need of money at the asset side by taking those who have excess in terms of money or cash or funds from the other side. So we are matching that, and then we are supposed to be very efficient in terms of matching that. So we identify those who are the ones with excess of funds, can basically help out also those who are in need of funds in deficit by doing this so-called integration. So we become the platform for those two groups. Now, of course, is the idea of every bank to have a lot of deposits to make sure that we cater for our ratios and whatnot. But in terms of for us, because we are have some limitations which I'll go through later in terms of what are the limitations by regulations, we really have to back up in terms of the deposit side. Okay, so we must have numbers in terms of the customers and also numbers in terms of the volume of deposit that we want. Okay, so when you talk about better products, we talk about zooming into the financing products. So we have to basically introduce new ways of managing things. So we're talking about, for example, data analytics in terms of having an alternative credit scoring, in terms of to boost basically the SME and startup participation rates. Because you see, the issue right now is mainly when we talk about incumbent banks, because I was also from an incumbent bank before. So the way of how we do the credit scoring is basically based on the typical traditional way. We look at the income statement, we look at the, for example, your P&L, your numbers, financials, and so on. But when we talk about this group of people that we need to help, say for example the B40s, you know, we talk about those who are selling small holders, talking about those hawkers, for example, yang jual burger, yang, you know, the nasi lemak, makcik, and so on. So then they don't really have access in that sense. Why they are categorized as underserved? Because they don't have access. And when you talk about alternative credit scoring method for financing products on this kind of group of people, so we're looking at a different way, a different method. Then comes to the way of how we want to evaluate them, because we need to have some assurance as well in terms of whether they are able to basically pay whatever they take from us. So what we do is basically we look at, and I believe this is what digital banks are supposed to be there also, the reason for them to be there. So we look at alternatives. For example, payment of your utility bills, your TNB bills, electricity bills, for example. Looking at your mobile phone bills, or how diligent are you in doing or paying your bills. So in short, you know, like now we're talking about the era right now, everyone has a handphone, right? So they will be, to a certain extent, make payments in terms of their usage of the mobile phone network and so on. So from there, we can gauge whether the customer or the applicant is basically someone who is disciplined in terms of paying, or you have issues in terms of your payment. So that can become an alternative source of how we do the credit scoring for the customers for digital banks. Now, the third part of it is basically also a differentiating factor. We call it the PFM tools, the personalized financial management tools. So these tools, if you go to the incumbent banks mobile apps as well, they do have this also. So what's the difference between the digital bank? So you can see that, as I said, digital banks are still new in the market. We also provide the normal, what do you call it, mobile applications for customers. And in fact, that's the only way for customers to see us. That's the only channel that we have. But we are basically supposed to provide like a budgeting tools. These tools are basically to help the customers in terms of one, managing their finances. Number two, to basically have to look at the statistics of spending, their savings, for example, their investment, if you want to do it even a smaller scale, to manage their future income. And many of us, I would think that we know that how much we are getting every month in terms of income sources, main income sources and other income sources for some. And also your spending, you might be monitoring the bigger amounts of your spending. But how many of us do really track to the very smallest volume of your spending? Say you go to the Mamak shop and then you just buy teh tarik, for example, right? That costs you 250. Then you don't really track that. You don't really, oh, I remember 3 months ago I spent 250 on the teh tarik. You don't see that, right? But when we have a PFM, not only that it is being tracked and being presented to you in the way that you can really understand and appreciate the statistics, but also in terms of your planning. So it will basically record every single transaction and analyze it and put into a data form or statistic that when you look at it, okay, I've been spending too much on, say, for example, the hairdresser, or I've been spending too much on, what do you call it, groceries. So that particular statistic are being served to you because for you to be able to manage your finances better in the future. And this is very important because not only talking about the micro SMEs, we're talking about individuals who run small businesses, right? The dropship, the one who really do, say, for example, marketing on his own, trading business in a small scale. Sometimes they use their own personal bank account for this purpose, and they don't really have a way of how they can manage their accounts, right? Because they don't run a company, they don't have even an enterprise. They run it on their own individual basis. To a certain extent, what's being talked in the market right now for us as well as for other digital banks, form of robo advisor. So that terminology is not new, but the way of how it's embedded into the mobile applications is something very useful for the customers, going to be very useful for the customers. So this advisor, I would imagine that is something like, it's not only helping you in terms of your financial planning, but also it helps you in terms of your travel planning. So say that, for example, the way of how I look at it is, you of course have on certain occasions plan to go somewhere with your family. Say that you want to travel to Kota Baru, for example, with the whole family as a vacation, not as balik kampung. That one is a different thing, Balik Raya is a different thing. But it's not going for a vacation for the whole family. So you have a plan, you have a budget, and then what you can do is go into the app and put in the date when you want to go, and with your current spending in and out of your account, the robo advisor can actually provide you with statistics and say that, look, by the spending pattern that you have and the incoming of funds into your account for the past couple of months, you can only go for that vacation with your family to Kota Baru in the next 2 years, for example. 2 years very long, kan? Who wants to plan for the 2 years punya vacation, right? So the thing is that particular mobile application is not really only showing you statistics, but it also analyze the data and then it provides you advice. So you can just click in there and they're supposed to give you advice, or this is your patterns, incoming fund and so on. So you might have to put aside, for example, 20% of your savings into a particular pot so that you be able to increase it to a certain extent, that can cover all the expenses, your traveling expenses, your lodging, your ground transportation, your flight air ticket, for example. Okay, so that's how it's making a difference. But of course, we are not seeing it now because all the banks are still new. 3 banks are launched, 2 not yet. But I think in the next future, inshallah, this will be something underlying what is being held there. Apart from what I mentioned in terms of PFM for those small traders, small individual traders, and also individual the SME or micro SMEs. Okay, can move to the next slide. Okay, a little bit of statistics or rather facts check. Okay, in July 2021, Bank Negara actually announced that it had received 29 applications for digital banking license, whether under FSA, the Financial Services Act, conventional bank, or the Islamic Financial Services Act, IFSA. So 29 applications altogether. And after a 6-month period of application, the what do you call it? The period of submission ended in June 2021. And in April 2022, Bank Negara announced the 5 successful applications for digital bank license. So here you go. There are 5. GX Bank, it was the first digital bank launch. And then AEON Bank, that is us. And we have Boost Bank, launched I think about a month after us. And the latest one to the group is CAF and also Right Bank. So CAF and Right Bank, they have given they are already awarded the letter of to operate as a digital bank, but I think they are just gearing up things to basically launch. So in our world of digital banks, these are what we call as peers. We don't look at each other as competitors. Normally, or rather honestly, I would say last time in my previous life in the government banks, we always refer to our competitors as the other banks, right? But since it is a very small group, and then we are also very small in nature, so we are very close knit, and we call ourselves as peers to each other. But of course, we compete to a certain extent in terms of the products and services. Okay, the next one. Okay, now comes to the framework of digital banks. So if you look at the framework, the integrity of the framework itself, it covers a lot of things. But among the few things that I want to highlight is basically talking about the areas where Bank Negara really put it as a requirement to all digital banks, regardless whether it's Islamic digital bank or normal digital bank. So number one is in terms of the capital. So we have to maintain the 100 million capital during the phase of what we call foundational phase, that is between 3 to 5 years. We are only allowed a cap of 3 billion ringgit asset size. Okay, 3 billion ringgit asset size within the foundational phase, 3 to 5 years. So they call us as now what they call us as undergraduates. We are still all undergraduate. We haven't graduated. So graduation means that between the 3 to 5 years period, and we are supposed to graduate. Graduate means that now the capital requirement increases to 300 million. Okay. So the governance and risk management, of course, digital banks must comply with Bank Negara corporate governance guidelines and to ensure robust risk management framework. I think these are quite pretty standard to incumbent banks as well. Comprehensive risk management function must be in place, especially to handle the cybersecurity risk, fraud, ops risk, and also adherence mainly to RMIT. RMIT is the risk management in information technology policy. So that covers all the aspects of IT security, data governance, cybersecurity controls. So these are one of the items highlighted by Bank Negara as very important to digital banks. The third one is what we have touched earlier, that is the financial inclusion focus. So we are supposed to basically drive and also put a main objective of financial inclusion in all our plans, in all our operations. So we cannot forget this part, and in fact, we are supposed to report to Bank Negara on the periodical basis on the achievements and results that we have from the KPI that has been set for us. The KPI that we have been set with Bank Negara upon agreement by Bank Negara on a financial inclusion agenda. Also on AML, anti-money laundering and counter-financing terrorism. These are all regarding AML controls. Knowing that we are a digital bank, the AML part, which includes also the scammers, the fraudsters, and mule accounts is pretty much important. So we don't want we have to make sure that digital bank doesn't become an area where there are weaknesses that basically fraudsters can come in easily, scammers can come in easily. But okay, let me just share with you. Throughout the experience that we have this couple of months after launch, it seems that Mule and Mule Masters really love to bank with us. You know, they really want to try for digital banks because there is no face to face, right? There is no when the customer wants to open an account, you don't have to go to the branch and whatnot. You don't have to go through that normal KYC process. It's just eKYC. It's all digital via a normal channel. It's one channel anyway. So they like to do that. But for scammers, it seems like they are not really into scamming they're using us as a main bank account. Reason being because scammers normally look for accounts with money. So in our case, because normally those who open up with us, our minimum balance is basically 20 ringgit only. So by opening up an account with 20 ringgit, you know, there's nothing much in there for scammers to use. So, but for Mule, yes, Mule, there is a trend showing that mules are really getting into digital banks, and we have also in our constant engagement with Bank Negara, they basically have warned us that this is going to be one of the areas that they are very concerned on. Okay, technology and cybersecurity requirements. So, in terms of technology requirements, I think there's certain points that Bank Negara put to digital banks to ensure. Number one is we should be able to have transformative technology in development and delivery of financial products. So this includes scalability, agility of technology stack, and also they even mention the couple of words which are new to me when I first joined the organization. They call it this technology stack built on microservices architecture. It's really mentioned in the document. So in the framework, it is actually something that Bank Negara wants us to explore and understanding it. This is how the Bank Negara looks at us in terms of escalating our technology support for all the banking operations that we want to do. So another part of the technology is also the use of deep customer analytics to assess customer prior to subscribing to any product. So basically, we are supposed to be better in terms of offering our products to the customers in accordance to the real need of the customers. Okay, it's not like one product standard for everyone, but it is tailor-made to certain group of customers so that they can have something that really suits their needs. So this talking about, again, as I mentioned earlier, the micro SMEs, the individuals who are underserved. So in terms of Sharia-wise, the other part of it that included in the requirement, not so much in terms of governance of products and services, but it's more on the governance of the Sharia committee. So it is mentioned that Sharia committee members, we're given a leeway of having only three, a minimum of three individuals, as opposed to incumbent banks of Islamic banks of 5. And we can have the meetings of the Sharia board of at least 2 times a year. But I don't see this as something too crucial for us because anyway, we can have 3 Sharia committee members. But in terms of the meeting numbers, I can tell you that since even before we launch, since I joined in February 2023, we've been having Sharia committee meetings, like sometimes even twice a month, because we are in the development stage, right? Initial stage. There are so many things that we need to get clearance from Sharia committee. There are so many things that we need to get guidance from Sharia committee. So not only in terms of the products itself, but also in terms of processes, in terms of documentation. So everything needs to be discussed with Sharia committee. So if Sharia committee were to join a digital bank to understand that during financial period you can have only 2 times meeting a year, so it's not that way anyway in real life. Okay. The third part of it is, as I mentioned, the financial inclusion just now. There is a dedicated KPI prescribed by Bank Negara under the DIME framework, the Digital Bank Financial Inclusion Framework. So it is important because, as I said earlier, overall in Malaysia, we have about 15%, 14-15% of unbanked groups and also 40% of underbanked or underserved communities. So these people are those who are, as I said, they have unmet needs. They have no access to, for example, even a credit card for their personal use. They are underinsured or under takaful, and no long-term savings at all whatsoever from this group of people. Okay. And the final one is, of course, the adherence to customer protection and market conduct. So this is one of the most important part, because the needs and the protection of customer is the utmost priority in the banking sector. Okay, can move to the next one. Okay, so this is, as I mentioned earlier, I will not dwell too much into this, because this is, I believe, a standard by everyone, even the incumbent banks. So the segregation of units that runs compliance division in a bank. So we have regulatory compliance, which takes care of the laws and regulations by the regulators or even by the associations, and look at that, do a gap analysis in terms of if there is any new regulations or new variation of the existing regulations. All that needs to be catered for and is handled by the regulatory compliance side. They also provide advice to all the stakeholders within the bank in terms of if there is any clarification needed on top of the, or rather based on the regulations. Second one is the crux of compliance, which is financial crime compliance. That includes anti-money laundering, CFT, sanctions. Basically, the most important part under the financial crime compliance is about money laundering and also about sanctions compliance. Okay. Third one is, of course, the review part, compliance assurance, and also the Sharia review. I will touch a bit on Sharia review later on at the later part of the presentation. Compliance review basically perform the independent reviews, because when we run as a bank, there needs to be check and balance. And as compliance rank similar to risk, what we call as the second line of defense. In a bank, there are three lines of defenses. I believe you're familiar with this. The first line is the business unit, the front liners, the one facing customers, and so on. Second line is risk and compliance, and the third line is audit. So apart from this, is also taken care by compliance, which is the review, the normal review that we do, as well as the Sharia review. Of course, at the third line of defense, there is audit. They can perform also Sharia audit, and the audit becomes the third layer or third layer of checking in the bank. Okay, so I'll just pause here for a while if you have any questions, because we're going to the next session already. Go to the next slide. So let's see if there is anything that question or clarification needed.
There are some questions in the chat, but I
see.
yeah, so if anyone wants to ask directly first, and then if not, we'll read the questions on the chat.
Yes, because the reason why I would pause and allow some questions, because sometimes you may forget what you want to ask after you come to the end of the presentation. So if you have anything that you want to ask now, you're most welcome to ask.
So I open to the participants first. If not, I'll read some messages that I received. Or I think this is direct message. Okay, yes.
Assalamualaikum.
Just introduce yourself and then you can ask the question.
Assalamualaikum. Arifin. Okay. Okay. Regarding the financial crime and compliance assurance and Sharia review. Okay. As per what you know, is some banks they combine for assurance, they combine financial crime assurance and also compliance assurance. So what is your opinion if we have different function where we have functions specifically for AML assurance and also compliance assurance? And if there is any conflict if we perform both function AML and also regulatory compliance assurance? What is your opinion on this?
Okay. Alright, thank you very much. Arifin daripada mana ya?
CAF Digital.
CAF Digital, okay. Cepat-cepat sikit lah launch. We don't have any friends yet in our Islamic digital banking era.
Sikit lagi.
Okay, insyaAllah.
InsyaAllah.
Okay, basically, there is no particular requirement in terms of the segregation or in terms of the, to put it together. So to my mind, when we first established the sections under the compliance, it can be structured in so many ways, right? So there is so many ways to do it. Even from my previous place, also they structured it differently. They even have more sections under the compliance division. So to me, it's really not a question of which works best, but you have to really look at how the operations of the bank that you are in, and to see how it's being structured in accordance to the feedback that you receive from your relevant, I would say, board governance committee lah. Because sometimes we structure something, but according to the board governance committee, they would say this is not the best way for you to run this in this organization. So because it depends, right? The complexity of the operation, your products and services, and then what are the areas that you need to cover. There's a lot of that. In our case, in AEON Bank case, we just put it like normal financial crime compliance as per how incumbent banks are doing. And we put under one section on the right, as you can see, the compliance assurance, because this compliance assurance we catering for all the other what do you call it, independent reviews that we have to perform. So mind you, I think that a lot of things that you need to look at under compliance assurance. I'm not sure who's running it there, but a lot of things, not really only on the in terms of the, what do you call it, the normal reviews of the regulations, but also you have to review, say for example, treasuries in terms of their communications, their dealing communications, and then you have to also review the, as you know, EKYC punya FAR, FRR, and so all that. So that's the scope of a review. And of course, under Shara review, wow, there's something that we can discuss as a topic by itself. Shara review, a lot of things that we need to go on to ensure compliance, especially the challenges that we have under digital banks.
Okay, thank you, Encik Syarul.
Yes.
Thank you, Cik Arifin. Anyone else that wants to ask a question directly? So we open to the participants first in Zoom. If not, I think there's a question in the chat, Encik Syarul, but I
Okay.
think it's a more general question. I think we can leave it until the end, maybe.
Okay. All right.
All right.
Okay. So let's move on. We are at now 3:54. Okay. I need to speed up a bit more. I'll focus more on the challenges lah. Okay. Next part is basically dwelling into the challenges. Okay. Okay. This one. So of course, I mean, if you were to put every challenges in, there'll be a lot of them. So many of them. Being a small digital bank like us, and also like any other digital bank, we are so small that even our asset size is also capped at 3 billion only. And then we what do you call it? We can fit into one floor of the office, because we don't have any branches, right? So it's really small for everything for us. But in terms of challenges, there are so many, but I will focus on a few things. Challenges which are, number one, something that I can share. Of course, as you know, as a bank, we cannot share some other things that we are still working on, or things that we are negotiating with the regulators lah. But the things that I'm sharing here is something that we have gone through, and maybe something that we are closing to get to the place where we want it to be, and in our regulations. So number one is keeping up with the evolving regulations. So you see, I'll give you an example of even before coming to keeping up with evolving regulations. You see, as a small bank and a new setup bank, we have regulations that we have to comply. That's given, right? So under a normal incumbent bank, you already have hundreds of regulations to comply. When I look at when we scope through the regulations, I can see that about almost close to 300 regulations that we have to comply as an Islamic digital bank, or rather as an Islamic bank for that matter. So you look at it from that perspective, incumbent banks are already there for many years. For many years, okay? So they have gone through the process of doing gap analysis. They have gone through the process of doing risk rating of the regulations. So they know which regulations are considered as high risk, medium risk, low risk, right? So then they already have a plan or a program to basically look at, if the high risk regulation, they will go and look at it maybe once a year for the review. For the medium ones, maybe they can go and see, okay, we'll do like 3 yearly. Low risk, maybe you can just do 4 or 5 years one time, right? But for a new setup bank, you don't have the luxury of going through everything because we are just here, even not even a year. So the number one challenge that I would say to digital banks, or even for any new bank for that matter, is that for us to ensure that we have done that gap analysis to identify what are the gaps between the requirements in the regulations and also our internal controls, our policy and procedures, the way of how we run this right now. Do we really understand, or do we really can find a loopholes where there is a requirement in the regulation that we have missed, for example? So those are really the big challenge that all digital banks are having. Of course, we can do it by, batch by batch. We can do it with the limited resources that we have looking at it. But as a running bank in operation, there are many other things that you have to do as what we call BAU, business as usual, right? So this becomes something that needs to be cleared, because from experience as well, I can tell that Bank Negara looks at it very seriously, for us to be able to understand that what are those regulations applicable to us, and what are those areas that we have identified the gaps, and what are you doing with it. All this comes into the plan that we have to do. So in our case, what we do is, we have to resort to what we call as outsourcing. So the outsourcing is basically using other people's talent, maybe a legal firms, or what do you call it, consultants outside, to basically do the gap analysis for us. But then when they find the gaps, they have to present to us, and then we will be doing all the evaluation and validation of the gaps, whether it's real, not real, whether it's really a gap or not. So the first layer of it have to be done in such a manner that we outsource it. So then we'll take that results and do it internally for the validation. So that's one way of how we can basically mitigate that issue. And it is closely related to how do you keep up with the evolving regulation. There's so many regulations that's being enhanced, that's being basically updated. And then to keep up with that, what we have right now is like a central regulatory change management framework internally. So this internal regulatory was basically to track requirements lah. What are the changes? What are the gaps that we find, in such a manner that everyone has to be putting in feedbacks to this particular centralized regulatory database or framework. The next one is ensuring compliance with multiple regulatory requirements. So this, I think, is also similar to what is being faced by the incumbent banks. So requirements, one in one particular regulation, for example, but it's actually multiple regulatory requirements within that same policy document. But some of the requirements are not, I wouldn't say friendly, because that could be Bank Negara staff also in here, in this audience. So it is not catered or designed basically for digital banks, simply because digital banks were not there 10 years ago, 15 years ago. Okay, I can give you some examples, like the ones we face when we look at the basic banking services guidelines, the existing one. There are some requirements in there which says that the bank, of course, the main requirement is the bank must offer a basic accounts, whether saving account or current account. But then when it comes to the requirements of having an OTC transactions, over-the-counter transactions, which means that at branches. So digital bank, we don't have branch, given that note. We cannot basically comply with that, right? So that's number one. And then there are also some other requirements within that particular regulations, which the digital banks cannot comply. So what we did was, of course, as I said at the first point, to work closely with regulators. We basically negotiated with Bank Negara and say that this particular requirements is something that is looks like not applicable to us, but of course, regulation is a regulation. There needs to be some exemptions. So in this particular situation, we were granted that exemption. Not only us, of course, the rest of the digital banks also. So this is the way how we can maneuver upon finding or upon identifying the requirements that we cannot meet. Basically, simply because it is not related or not applicable to a digital bank, not because you find it hard to comply, but because it's something that cannot be applicable to digital bank. So we have to go back to the regulators and negotiate on this and discuss with them. The other part is of course also to work closely with our Sharia boss in terms of requirements with regard to Sharia expectations or Sharia requirements lah. Okay, in our in AEON Bank, we also proud to say that we have one platform of what we call GREC. GREC is basically governance, risk, audit, and compliance platform. So it is one single platform integrating audit, risk, and also compliance. So everyone has becomes the owner. So the three divisions, and we share information within that particular platform to the extent that is allowed by the regulations. So, say for example, in terms of aligning the programs or the review plans that we have from Sharia Sharia review as well as the compliance assurance side with the Sharia audit and Sharia and also audit plan for the whole year. So normally coming from incumbent banks, I wouldn't lie that normally between the divisions, they don't share this kind of plans. The main thing is that what we faced last time is that when you have different plans and then different teams are going to see the same departments or the same group of people to perform their reviews. So first, for example, Sharia review come into the picture and review the products which touches on certain departments. And then upon completion of that, for example, or even not even completing that, Sharia audit pula come in and look at the same areas or the same products. So to avoid this kind of overlapping, which is very taxing on many people, so we have to actually do what we call as the planning before even tabling our plan to the relevant committees for approval. So we have that in the system. Everyone can see each other's plans, and then we can actually negotiate between one another. So this year, say for example, you do on personal financing. So next year I'll be doing that. So this year you can take that out from your plan and so on. So that's how we integrate between us to make sure that we can run efficiently. So the next slide. Oops. This is showing gaps also under the regulatory compliance in terms of the challenges that we have, is to basically address the operational gaps in compliance between innovation and consumer protection. So you see, the technology side is basically the crux of all digital banks. I would say maybe close to 60 or 70% of our manpower within the digital bank is basically coming from the technology side. So they are the builders and so on. So these are the innovators, the inventors of the what is being run within the bank, products and services, processors and so on. So they are the ones running it. So when they do run that, they don't really look at the nitty-gritty part of say a product development cycle. So that is why in our case, what we do is to mitigate this kind of challenges, to ensure that everybody comply with the relevant regulations. We do implement what we call as compliance by design. So in the approach of product development, that particular design in terms of system, in terms of structure, is basically compliance first. Then only work within that compliance. Because otherwise, if we leave it to the tech guys, the builders, they love to build. They build every now and then. So many things they have to do. So they don't look at compliance or governance or risk as something that is too important in the whole job structure for them. Okay, so we are the ones that have to come to them and say that, okay, these are the design that we have to build, and you have to follow it, and there are triggers in between to show that if you have something wrong that you have not complied with, for example. So that is something that we put in as automated compliance checkpoints within the direct system or the platform that we have. The final point is on having a compliance champions. I think this is also being practiced in incumbent banks. These are the central focal point of individuals who are basically becoming the bridge between the governance side and as well as the business side or the other stakeholder side. So the difference is that they are the ones that basically have to own it. They also have access to the system, to the direct system, and they are supposed to be the one that disseminate every news or information or data or anything from the governance side to their own internal division. The next one is implementing the right AI system and automation in compliance. So, as you know, there are many systems out there that provide AI capabilities and system. Of course, they are also money making, so they would show the best of what they have, things that they can do, how they can actually enhance the system that we have right now, the processes that we have right now by using AI. But the issue is we don't really know how they work because we are not long enough in the market. I would say that as I mentioned earlier on, if you talk about 18 months and above, then you can have quite stable data, quite sufficient data for us to feed into the machine for learning. So the moment they learn, they understand the data patterns and everything, then only they can provide more beneficial results and beneficial advice for us to in terms of how we want to run the system. So the thing is, we have to really regularly test and also refine as we go along. Mainly when we want to reduce errors or we want to make sure that they are performing to the extent of what we need, as per how it is intended. There's no point of us having an AI system in the whole backbone, but they are not really, contributing to how we want it to be. Okay, these AI solutions can also include the compliance with ethical and Sharia standards as well. So again, as I mentioned, we have to feed that into the system before they can learn. Something that we have to feed, then only they learn. For learning, they need to have that sufficient data over a period of time, not in terms of a couple of months. Okay. All right, we go to the next slide. So another one, as I mentioned earlier on, because we are majority technology staff, and also majority not from a banking environment. So the issue is the appreciation of compliance and governance a little bit lesser, or maybe a lot lesser than those coming from the banking environment. Because you know that banks, we are really highly regulated, right? So we're already used to customer protection, customer data protection. We are very used to taking care of information, not to leak customer information, sharing of customer information with even our closest friends or family members. It's something that we cannot do. But to them, they're not familiar with this kind of environment. So the challenge for all digital banks, I believe, when I talk to my other colleagues within the other digital banks also, they say that it's in their nature, it's in their blood for them to act on things very quickly. To them, basically, if they can build something that they can see, they truly believe in it, they want to launch it the next day or the next week. They build something today, it's possible they want to launch it tomorrow. So that's the thinking that they have behind. But as you know, if you are already done product development, the cycle of product development needs to go through vigorous checks, internal approvals. Then you have to go through different stakeholders to get it cleared. So that's the whole process is something I would, if I can put myself in their shoes, something very slowing down things. It slows down what I want to do and what I want to list in the market. So that's the part where we have to increase engaging in the manner where they can understand. And these people are youngsters, okay? They are not even 30, 30, 35 below that. So that's the kind of demographics we have within the digital banks right now. All right. So in terms of engaging them, say for example for training, we have to do like gamification. It cannot be like one-way training. They just get bored and leave us. That we don't want to have that as well. Okay. All right. So I think let's go to the next one. Okay, we are moving to the next section, FCC. Before that, any particular questions regarding regulatory compliance challenges?
There are some questions in the chat, Cik Sharul.
Okay. Hold on ya, let me open up the chat. Ui, banyaknya. Okay. Oh, Dr. Haji Razli Ramli pun ada. Hold on, which one should I take up? Okay lah, I'll try and address Dr. Haji Razli Ramli. Financial industry is actually promoting BNPL. Okay, buy now, pay later. However, we are now seeing digital banks introduce SNBL. Save now, buy later. Which seems beneficial, especially for personal financial planning. What are your thoughts on this trend, Haji Razli? Okay, thank you very much, Dr. Haji Razli. This one is basically very right. As good as BNPL is, the SNBL is much better, okay, because we know that the level of household debt in Malaysia is very worrying. This is one area which Bank Negara keep on reminding us. In fact, all the banks, we don't want to we don't want to have a situation where our household debts skyrocketing to the extent that we cannot contain it anymore. Okay, so we've been advised by the regulators, as well as we have been made clear by even our board members, that doing a save now buy later, meaning you save it first until a period of time, then you buy something that you want, is much better than you buy now and have a debt and pay it later. That is exactly what we have also, if you can see in AEON Bank, where we have the saving pots. So we have a thematic saving pots. Ni dah masuk marketing lah pula ni. Okay. The saving pots that we have comes under the savings account. We have savings account, we have saving pots. They are different. The profit risks are also different. So if you are not yet an AEON Bank customer, please become AEON Bank customers, then you can see and take the benefits. Savings account, as usual, you will not be paying so much of profit rate. But the saving pots are paying much more profit rates, because we want to encourage the customers to basically do these thematic pots to become this SNBL of what Dr. Razli is saying. Okay, so that's my thought on that.
There's one more question, Sharul, from Mr. Khairi. Mr. Khairi Saad. He's asking in terms of
Cik Khairi Saad pun ada. Okay.
about the priority.
Set a ratio of set priority between compliance assurance versus syariah review. Okay. Little bit tricky question there. Because right now, I mean, from the place that I came before, we have a teams similar in size in terms of doing compliance assurance and syariah review. But of course, when it comes to digital bank, it's a small setup. So the numbers are not that large. So how we have managed that is we merge the team together. So each and every single one person that resides within the compliance assurance and review department basically can perform both functions, compliance assurance as well as syariah review. So in that case, we don't really set the priority ratio. We have a plans for both. The plan right now is still individually run, meaning compliance assurance plan is being tabled to a different committee. Syariah review plan is being tabled to syariah committee. But then we have this idea of merging it. So I think in the next move, what you're going to do is to merge the plan so that the plan becomes one. And of course, the relevant parts where Syariah review have to, Syariah committee have to approve, then they have to approve lah accordingly. Otherwise, it goes to the next committee of board governance to basically approve it. Then we have one consolidated plan. There, every single one of them, or those who are not even having any Sharia background, also can perform Sharia review and learn from their peers. So that's the beauty of it being small organization. You can actually do many things. You can learn many things, and you learn much more faster because you have to do it, right? It's on the job training. You have to do it. I think that's my response to that. Okay.
And then there's one more question on I believe it's also related to a question that I have, Sharon, on the AI.
Okay.
Because I'm thinking of whether the AI source code is it outsourced or is it in-house, and then how do you mitigate in terms of the data leak if it is using AI from not from in-house? How do you mitigate for that?
Okay. The discussion on AI touching on source codes and everything, basically I'm not the authorized person to say. A person with authority will be coming from the tech side, whether it's the head of engineering or the CTO himself lah. But from what I know, the source code and everything has to reside within us. We are using the capabilities and the services provided by the AI system providers, the solution providers, but every other things need to be residing with us. Okay, even though we are cloud native, we are using cloud. We are not. We don't have any on-prem backbone system and so on, but we still have to make sure that it is within our own infrastructure, not using the backup for the AI solutions provider. That's to my understanding. I may not be able to address so much in that sense, because that's the another area of under technology side lah. Okay.
I think that's all the relevant questions so far. There's some
Okay.
general questions that we can leave until the end, inshallah.
All right. So let's move on. Now we are at the FCC side. Now it's already 4:17. Okay. This is just basically some information regarding what is being highlighted or what the priorities under FCC, financial crime compliance. I'm not going to go into too detail of this. I believe all of you must have been very familiar with money laundering. So in short, it is actually the process of converting cash or funds or property, which is derived from a criminal activities and make it legitimate. So it's actually why, as the name suggests, money laundering is dirty money being laundered. Okay, so basically to disguise the origin. So the relevant what do you call it sections or relevant steps included in there, just for our knowledge, to generation of dirty money coming from many things, drug trafficking, corruption, for example, tax evasion. And then there are three other layers there: placement, layering, as well as integration. This is where they use the banks, to deposit money in the banks. That is why the capabilities of the bank system and also security must be able to identify if the money that is coming in or being deposited into the financial system. The banks are the frontier of the financial system. So we must make sure that the money that comes into our bank really money that we know the origins, we know a proper KYC has been done on the particular depositors, and so on. Okay. Otherwise, this money will just come in from one place to another, go to the next stage of layering, multiple transfers and everything to disguise, to basically what do you call it? Disguise the trail of money, where it goes to, and finally it comes back into the system, whereby the people who are behind this, all the criminals, basically enjoy the money for whatever their personal benefits. So the next one is basically talking about the next slide is talking about the terrorism financing. This is also another aspect. The next slide, Dr. Marwan. Okay, so this is the item which is also very high on the list when we talk about FCC. Now, what we call as a process by FATF, they are performing mutual evaluation (ME) on Malaysia as well. So it's a process whereby the FATF, the organization, Financial Action Task Force, they basically do mutual evaluation to see the status of compliance or the status of how we manage our money laundering and terrorism financing controls within the country, meaning by all the banks. So Bank Negara is spearheading this every time when FATF wants to do that mutual evaluation. And then they will look at the controls of each bank, what you have in terms of the policy and procedures, in terms of how your identification, and how do you basically manage the cases of money laundering or terrorism financing suspects. So I will not go too much on this one. Let's go to the next one that becomes the challenge. Okay. All right. So these are basically, on a high-level basis, the preventive measures taken by digital banks. Okay. Of course, we don't have KYC, but we have eKYC. eKYC means electronic know your customer. As a single point of contact with customer is basically the app at the point of onboarding. Of course, we have all digital banks will have their own respective customer customer call centers for customer to basically call in for any issues or any post onboarding issues or complaints, for example. So when we have one channel for customer to come, that is the channel that we have to really tighten up and make sure that it is foolproof. Is something that will not allow any potential criminals or fraudsters or scammers to come into the financial system. Perform CDD, of course, that's also normal in incumbent banks. And then we perform name and sanction screening. Customer risk profiling is within our own investigations we have to do for each customer. Ongoing customer due diligence, that is in accordance to the customer rating that we have done. Enhanced due diligence, of course, if we have PAPs, we have what do you call it, other category of customers which we need to do enhanced screening, enhanced questionnaires, for example, to those to understand really their backgrounds, source of their source of income, and so on. Transaction monitoring is another one. Post onboarding of customers, we have to learn the patterns of look at the patterns of customer transactions and see whether there are any suspicious transactions that we have to raise what we call as STR, okay, to Bank Negara. We have to ensure record keeping as well as, of course, paramount importance, the training and awareness part. Everybody needs to understand this. Okay. Let's go to the next one. Zoom into the challenges under the FCC. For under FCC, we look at the issue of ensuring a robust eKYC solution or measures for a fully digital non-face-to-face environment. Sorry. As you can see, we talk about digital banks. Okay, everybody has their own eKYC solution because that's the only way of how customer can come into the bank or subscribe, become a customer and subscribe to the offering of the products by the bank. So when you have only one platform for customer to come in, we have to ensure that that particular platform is good, right? It has to really behave the way of how we want it to behave. It has to check things that we have laid down for the eKYC provider to basically check and make sure validate the customer, for example. But I can tell you for sure, 100% for sure, that there is no one single eKYC solution provider that is perfect. I can give some examples. Okay, this is from our own experience at our what do you call it, operation side as well as from compliance side. We see people that on board to our bank that apply to become a customer of the bank that uses documentation which are really not genuine document, I would say. For example, we are required to have your My Card, to basically take photo of your My Card, front and back, and then do a liveness test detection of your face detection, biometric authentication. Sometimes we see also in the earlier days when we first launched and during our alpha and beta testing, we see that customer that put in My Card which are already tempered, for example. Somehow or other, some people would like to put a different face on the My Card, which I also don't know the reason why, you know. Sometimes they put a different person photo on top of the My Card. Some people, they just change the name a little bit here and there, or they change the numbering on the My Card itself. So all this, I mean, we cannot tolerate this kind of course, they don't have a branch to go to, so they will keep on trying and trying, especially with digital banks, thinking that digital banks, you know, can I mean, they are trying their luck. If they can get through, then maybe these are the mule masters or these are the scammers lah, or fraudsters. So basically, the system, as I mentioned, sometimes also onboarded this kind of what do you call it, My Card. So the challenge for us is, how do we ensure, since we are saying that we are wholly or almost wholly doing digital, how are we going to ensure that whenever there's a customer that applies using a tempered My Card or ID, for example, are not being onboarded into the system? Okay, so that's the biggest challenge, I would say, in terms of customer onboarding, the biggest one, because this is the first step. This is the first gatekeeper. If that gatekeeper fault, then we can get, you know, a lot of criminals into the financial system. So that is why in our case, number one, during the how we mitigate that is during the first launching period, during the launching period. Even though we call it as a digital bank, we have to rely on the system and whatnot, we still do at the back end checking of all the onboarded customers, or rather, sorry, not onboarded customers, customers that apply, then make application, but then we still have to eyeball the applications and see whether these are real or not. We have to compare between the documentations that they provided, their MyCard, their liveness test video, their document verification. We have to do manually, meaning we have a group of people that looks at that. That is where we detected a few cases where it doesn't match or the MyCard has been tampered. By the way, do you know that tampering of MyCard, not the tampering, they call it defacing of MyCard is an offense by an act. So basically, sometimes you might say that my card is already old. So what I do is I just blacken the alphabets in my name. My name is Asharul. Seems to be the S tu tak nampak sangat. So what I do is I take like a marker pen ke apa ke, then just highlight the S so that it's clearer, so that I can be onboarded. You know that by doing that, it's already a breach of the act. So that's things that basically some form of things that we need to put into the training for our customers as well, because tampering, not only in terms of you tamper with different picture or different numbers, even you do your own numbers, MyCard number pun is actually already what they call as defacing of the MyCard. Okay. The next one is the emerging fraud trends and strengthening system controls. So fraudsters, as you know, scammers, all these are becoming rampant day by day. So it's not, it's not correct to say that if you have a handphone, you wouldn't get any calls from the scammers. There was a statistic that I ran through the other day showing that in a country where scammers and fraudsters are not so many and so rampant, you will receive a call or somebody who tried to scam you 2 months once. So meaning in the 2 months period, you receive once, for example. So that is a country where you see it's not so rampant. But in a country where it's so rampant, especially in the Southeast Asia countries, Malaysia included, so we can see that sometimes you receive scam calls. If you like to entertain scammer, when they call, you see the number, you don't recognize the number, but you still pick up. Then you can see that the trend is not even 1 month once. It's actually like twice or thrice in a week, for example, to get that kind of scammers call or scammers trying to fraud you. Okay, so these are the extent of which that we have to take care of. So how we are doing it is we are looking into periodic tuning of our ML rules. We have to really strengthen it and see the data that we have after a couple of months. What are the trends? What are the patterns? And also to the extent of trying to get and make sure that if, for example, the AI after certain point of time, they have learned quite well in terms of the trends, in terms of the patterns of customer transactions, they can possibly give a more beneficial results in terms of screening the transactions. And also we don't have to really look into the AML rules as per how we are used to in incumbent banks. They can actually look at transactions. I give an example of say a person who transacted 3 times a day. Then the amount is very small, like less than 15 ringgit, but 3 times a day. And it's like normal purchase at 7-Eleven or Mama Shop kemana kan. So that's quite okay, and it's quite standard. And the transactions normally 3 or 4 times only happens during the daytime. Then suddenly at one time it happens at 1 a.m. or 2 a.m. So the normal AML rules we say that, oh, this is a trigger. Obviously, right? This person pattern has been daytime punya transaction. Suddenly on one occasion or 2 occasions it happened at 1 a.m. or 2 a.m. Of course, there is a trigger. But when it comes to machine learning, if this person is somebody who work on shift and only work at night, so during the breaks at night, he or she goes out and purchase things at 1 a.m., 2 a.m. from 7-Eleven, and that's quite common for him. So by the AI rules, they have understood that this is the pattern of this guy, so you'll not be triggered. You see, so that the difference of employing AI and using our own what we call as normal AML rules. Okay. Right. The next page, talking about meeting regulatory expectations in terms of screening requirements and compliance controls. I think it's what I mentioned earlier, also applicable here in terms of using AI-driven screening solutions for a risk-based approach, and also ongoing system tuning and machine learning. So I guess this is something that I've also discussed earlier. I'll just skip that. The next one is something, an issue that I wish to highlight also. One of the challenges that we have in terms of onboarding customers is basically sort of requirements, even though it's not mandatory, of what we call fund transfer verification. You see, for a digital bank, because we have eKYC, we don't have branches and so on. For us to onboard the customer, when the customer comes in and apply, go through the screening, the what do you call it, the eKYC solutions, checking on you, your my card, checking on your face, liveness test and everything, all passed, for example, all done. But then after that has been completed, you are not deemed as an active customer yet until and unless you do a fund transfer verification, FTV. That means you have to transfer an amount, minimum amount, from another bank under your own name. And it's not a joint account, it must be under your own name in another bank. For example, from RRG Bank, from Maybank, CIMB. So you have to transfer that amount from that bank to the digital bank. Then only you can be considered as an active customer. That meaning that you have gone through all the processes and you are granted that savings account. So the issue that we have is when you talk about unbanked customers, they don't really have a bank account anywhere. So they are first-time bank customers. So in terms of trying to fulfill the objective of the financial inclusion, when it includes unbanked or unserved customers, the underbanked and the underserved is quite okay. You know, they are only underserved, but this one is really they don't have any. So that's the challenge that we have. We cannot really go all out to basically include them as our customers when we have these particular requirements. Of course, it is basically not mandatory, but it is something that we have to also look into. And also in terms of providing alternatives, say for example, other form of verification of the customer. Some of the verification that we can think of is, for example, a liveness test, not only in front of the camera, but also you have to like screen through, you know, there are some other digital banks doing this outside of Malaysia. When you want to onboard into the digital bank, you have to like take a selfie of yourself, meaning video selfie of yourself with the environment, you know, surrounding you, to show that you are really, number one, a human. You are really who you are, as compared between your liveness test and your screen to your ID photo, for example. So a lot of things are being is being checked when you do that upon onboarding. So there are other ways to do, which we are also exploring. We can have other ways not to really have FTB. Otherwise, this becomes very challenging for us to onboard the unbanked or the unserved customers lah. Okay. All right, can we go to the next slide? Okay, since we have come to the first section, any particular or burning questions first before explore further?
I open to the participants first to ask directly before we go to the chat. Anyone want to ask directly? There's a few questions in the chat, Sharul. Maybe I'll just select some that I think is quite relevant. In terms of, I think there's a few questions that are asking in terms of the challenges for digital banks specifically. Can you pinpoint these challenges for from your experience for digital banks? And I think you already mentioned that, but I think in terms of when it comes to transactions that require physical possession, for example, and this is related, I think, more relevant for Islamic banks, because some contracts may require some physical assets. So is there like a similar challenge for that you have experienced for AEON?
Okay. The other point that I forgot to mention also at the earlier part of the presentation is that right now we only have a few products. Deposit side, we have savings account, debit card, PFM. Some other things are services like basically like bill payments and so on. But in terms of financing, we are not there yet. We are not started to do financing product. But of course, in the context of the question, I think the first product that we're going to launch, inshallah, in the next couple of weeks, is basically personal financing. We are still doing testing. The personal financing that we are doing, or rather we wish to offer, is basically a bit different from the incumbent banks, because it goes on a smaller scale. Um, I think there's one slide that we're going to go through in terms of the transactions under the challenges. I think we'll go there, discuss that further once we reach that side of the challenges. Yeah, they want more on the commodity trading because it's a tawaruk product and so on. Okay, can we go that as we go along?
There's one
Next.
someone, Encik Arifin, that raised his hand. Maybe Encik Arifin, you want to ask the question directly?
Yes.
Yes. Cik Syarul. Saya lagi.
Yeah,
Okay.
okay.
In terms of the governance and also segregation of duty. Yeah, as you know, in financial crime or in MLCFT department or whatever you call it, we have a transaction monitoring unit, we have quality assurance, we have FCC assurance, and also advisory, right? So in terms of quality assurance, and when someone working under quality assurance, what is your opinion if the quality assurance person also involved in the AML safety operation, for example, setting up the parameter and adjusting the parameter and any other related activity? Is it will affect the duty as a quality assurance itself, or it's okay to be like that?
Okay. My opinion is not okay. Tak boleh. Simply because that function should be independent to a certain extent. That is why I understand that some banks, they put it together. Okay, the QA part, the assurance part, they put together under the same FCC department or division lah, for that matter. That is why in AEON, by what we do is, this is some some advice to you as well. We took that function out of compliance, out of FCC, and that functions is basically parked under compliance assurance function. Okay, so a part of the functions, as I mentioned, the things that they have to do under compliance assurance is also QA assurance on AML, QA assurance on the eKYC, QA assurance on fraud. So all that becomes under a compliance assurance, not parked under FCC itself. Well, it can be parked under FCC, but it has to come under different section lah. But in our case, we don't structure it that way to avoid any conflict of interest. Of course, I think many of you would understand as well. Conflict of interest will actually surface in some parts of the compliance function. Say, for example, my compliance assurance department is basically reviewing my FCC compliance. Okay, in this case. So when they review and they found something, so they come to me as the ultimate approval of the findings or the observations, and also for the plans for action plan and so on. So when I look at that, knowing that FCC is under me as well, I can simply say, I don't want to sign on this. This is not an issue. You see, I can simply say that this is not an issue. You might have identified it wrongly. You might have verified it wrongly. So that's some of the things that is happening in industry as well. There is no real one solution yet to this. This has been many years back been brought up for discussion. Of course, we have to maintain that separation and so on in terms of powers, authority. But still, when it comes to approving party, it is still me to approve whatever FCC is doing, and also me approving the findings or observations on the FCC by another division, by another department. So to make it lesser in terms of conflict, might as well carve that out and park somewhere else lah, not under the same department. That's my opinion on what we are doing in AEON Bank lah.
So whatever it is, it need to be separated lah, not only under FCC, but kena bawa keluar lah kan.
I mean, not really kena, but in our case, we do that. Sebab we don't want to have any issues whenever we are being challenged, especially by audit lah. When audit comes and challenge, how do you maintain independency? How do you maintain, your this? So we have to reduce that risk basically.
Okay. Okay. Thank you, Encik Asharul.
No problem. Okay.
Okay, I think we can continue.
All right. Let's continue very fast. It's already 4:42. Okay. The challenges that we have, number one, managing multiple interconnected regulatory guidelines. As I mentioned earlier, compliance assurance and review are looking into performing independent reviews in terms of the internal controls, whether we comply or not with the relevant regulations. And to do this, they have to understand, must have that level of understanding when there comes to it comes to multiple and interconnected regulatory guidelines or requirements. Okay, so how we want to resolve this is, again, as I mentioned, we are using this GREX system. This GREX system or platform is basically still new, and we are putting or we are enhancing it as we go along. The functionalities can provide for many things, but we have to suit it. We have to really understand how it works and how it benefit us, help us out in our day-to-day functions, basically. So we must make sure that the team that's doing the review understand, identify if there is any conflicts, and then use the system to basically identify also what are the areas or how the system can actually help in terms of pinpointing what are the areas that we need to focus on. For example, let's say the corporate assurance wants to look at PTD guidelines, product transparency and disclosure guidelines. So normally for PTD guidelines, you will look together hand in hand with FTFC guidelines. Okay, fair treatment of financial consumers. So what are the relevant requirements within these two regulations that can be put together so that when the review is being performed, they will prompt you, these are the areas that you need to look at. Okay, a particular product, whether it has gone through the normal process of approving and whatnot, complying with the relevant requirements, we have to see and browse through the regulations. But with the system, it can actually pinpoint to you, these are the areas that you need to look at. By just putting in what are the areas you want to review, for example, or you want to provide assurance on, then it all comes up as in areas that we need to look at, the relevant sections or requirements within that regulations. So that helps a lot. Okay, the challenges. Secondly is the identifying and addressing compliance gaps effectively. This is an evergreening kind of issues. Once you identify and address the compliance gaps, how we want to make sure that it is effective. So number one, of course, we implement what we call as the continuous compliance testing and the Sharia instead of periodic reviews. If we are able to do a continuous testing instead of periodic of what we are doing right now, that will be brilliant. That will be the most ideal case. Continuous means that, again, it comes back to machine learning. The moment we have machine learning, the system understand what areas that they need to pinpoint to us, so they can do that basically on the ongoing basis and highlight to us if there is any issue or any irregularities within what is being done within the process flow, within the documentations, for example. Then it's easier for the team to basically pick up and then do validation whether it's real or not, then only highlight it to the relevant parties. So that is part of the plan that we have. I mean, because we are already in a digital environment, why don't we just embrace and just maximize the use of digital in terms of enhancing the current operational activities that we are doing currently in the bank. Okay. And finally, we also have that what we call, as I mentioned earlier on in other sections, the compliance champions. So compliance champions is the main focal point, bridging between us and the relevant business units and other stakeholders to help us out in terms of the becoming the champion for risk and compliance for the whole division that they are in. Right. So let's go to the next one. I believe we are just a couple more slides. This is specific to Sharia. And would like to spend a bit more time here also because this is one area where it's very crucial for us. As you know, when we say we, I would mean many of us are really dependent on Tawaruk as our main contract for our products, be it on the asset side or the liability side. So when we have Tawaruk is our structure for the products. We have to have a commodity trading provider. So it really touches on me because I was also involved as part of the team that developed Bursa Suku Silat last time in Bursa Malaysia. So pretty much understanding the whole Tawaruk structure, what the CTP or the commodity trading providers are providing out there, as you can find. There are different structures. There are different ways of how they do things. Meaning the Shoraka, the Able Ace, the DDCAP and all, they do things quite differently in terms of the relationship of the parties involved. Also under BISAS. So one of the things that we find out is that the difficulty in a tower product, especially when it comes to digital banks and those who are running based on STP, commodity trading, CT. Yeah? So the CT is being done on STP, which means that transactions are happening nanoseconds. You know, as common as we can understand Tawaruk, there are three main legs lah. Of course, the first leg, second leg, and third leg. So these three legs happens in nanosecond. If you look at the points in terms of the seconds of transactions, you look at the electronic certificate. If you're talking about Bursa, they have electronic certificates. The first certificate or the first leg, second certificate for the second leg, and the third one for the third legs. If you put the timing only for in seconds, you wouldn't find the difference. It all happens on the same second, but actually it's not. It happens split second, a nanoseconds. So how are we going to basically identify which is the first leg, which is second leg, and third leg? So that is why we take it as a challenge when we say, how are we going to address the issue of testing or rather delivery of commodity when it comes to transaction of Tawaruk? It happens STP. Okay. So in our case, we went back to discussion with our Sharia boards. And after a few rounds of discussions, it seems that there is an allowance within the SEC 199 resolutions, if I'm not mistaken, to state that if you are doing it under STP, then we have a little bit of leeway. So what we do is, number one, we have to make sure that customer that comes on board, they actually not, the intention is not to take physical delivery. Meaning if they want to take physical delivery, it means that they are not really wanting that financial product. They really want that physical commodity. So if you want a physical commodity, then you have to go to the rightful place to get it. Okay, so we have to understand the customer. If they want to take physical delivery, it means that they want to test the system, right? If you want to test, then you have to indicate to us the intention to take physical delivery upfront. So the ways of how you want to indicate, there are many ways. You can call us and whatnot. But before you become our customer, we cannot really entertain you. So that's the part where we have to balance. You know, the moment you are not a customer yet, how can you put an indication to that you want to take physical delivery? So tak jadi jugalah. How are we gonna honor you because you're not a customer yet? At the same time, we provide clarity and also the clause within our terms and conditions, so that customer that comes in, if whenever they comes in, they have already waived their rights to take physical delivery of the commodity because they want the savings account and not basically the commodity itself. So after many rounds, a couple of rounds of discussion and so on, for a digital bank with STP function for commodity trade, this is one way that we can actually do to make sure that we are covered, and also we don't really breach any of the regulations or the requirements within the Sharia for this. Okay. Second part of it is the accuracy to check all the commodity trading to avoid slips or under trading. Again, when it comes to Tawaruk transactions, I came to realize that when we depend on the system too much, we sometimes may have the confidence in the system to run as how we have how it is intended. I'm talking about those transactions, maybe not in terms of big amounts, maybe not in terms of the normal transactions, but transactions that can happen out of the way of how we can think of. I give an example. In the my previous organization, basically the transactions are all system automated and systemized. So everything is done via the system. if there is any so-called shortfalls or anything that is not traded for the day, then Bursa will basically put notification by the system to the rightful parties within the bank and say that, okay, for last night, for example, there's no trading for whatever reason. Okay, it could be downtime, it could be many reasons. So then the team at the bank will pick this up, and what they do is they can have many options, whether they can ask Bursa to run another round of trading that very morning, or they can do the trading themselves, manually trade. In a digital bank area, I can see that even if, for example, trading is being done on a daily basis, we see that there is a chance, for example, that there is an error in terms of the trading, not because of anything. Of course, before running the system, we have the UAT, we have all those testing done, the requirements, user requirements, everything's done. But system as it is, it's there could be bugs, there could be nano downtime, which affect one of the transactions. So say for example, for the day you have a big amount of transactions that should be traded, but then the next day it comes in as, yes, trading happens, there is no check, for example, then how do you know whether the amount is correct or not? So we basically did a couple of runs of checking to the system itself. And the beauty of us starting a small bank and starting a bank from scratch is that we don't have many customers and we don't have that many transactions at the initial stage. So during the initial stage, we're able to look at and screen through the accounts by accounts and see if there is any discrepancy between what is being traded at Bursa and what is the amount that we have that is being processed by the system, core banking system. So then we realize, of course, Alhamdulillah, we find nothing, but we see there is a need for us to have like a dashboard, a place where basically in between system, between the core banking and also the system that push through the transaction for the STP, whether there is any discrepancy. So in between, we cannot check manually, but there is a dashboard that can show basically what are the transactions for the day, the transaction that's being streamed by core banking to the system, what we call the microservice, that actually generates the data for business to conduct the trading, the commodity trade. So that particular dashboard will highlight whether for the day the amount matches or there is any under trading or over trading. So we have tested the system and we put in some dummy numbers and it seems that the system works that way. So I really appreciative of the technology side to the even our internal teams that basically develop this to ensure that we can have a check and balance to understand. Because otherwise, if you don't have this check and balance, then you never know, because every day there'll be a trade. If there is no trade, then it will be triggered. But do you never know that whenever there is a trade also, there could be some under trading, that amount that is not traded, for example, because of the, as I said, bugs or nano system downtime. Okay. And also the accuracy from the one that we send to Bursa and what Bursa is trading. That is also another dashboard that we can check whether Bursa is trading perfectly okay. But so far, Alhamdulillah, we don't see any issues in terms of what Bursa is trading and what we send for trading from our own data. Okay. So that's the two areas of Sharia I can see specific to Sharia that this becomes a challenge and how we mitigate them. Okay. I think in terms of the presentation, that is all in terms of the challenges and whatnot. The next one is I just want to go through one slide, a couple more slides, but I just want to go through one slide. This is very important appendix. So the next slide is showing an awareness message. Okay. This awareness message is basically to highlight only one thing. That is, you cannot share or you cannot rent your account or debit card to anyone. So this is the awareness message. Your debit card is your own responsibility. It is actually, what do you call it, an offense. And not many of us know. Sometimes, even last time, many years before, when I go to the shop, for example, then I just sit at the table at the restaurant, and when we want to go and pay, I'll just pass on my credit card or my debit card to my son, and he'll go and pay at the counter. Even that actually is an offense. Okay, you can see there's another penal code. So be careful. That is not allowed. In a broader sense, you talk about the way of how account takeover is. You see the box on the left there. So this syndicate usually approach potential victims, offer to buy or rent the debit card for an account. Okay, they pay the rental to the victims basically on a monthly basis or weekly basis and whatnot. So if the victim agrees, then they pass it on. Then the of course the syndicate will use the debit card to their benefits, whatever they want to do, money laundering, layering, integration, and whatnot. Okay, so it comes to my surprise as well when I check a couple of times from our data also, and also from the experience of other people within the bank. Sometimes they are targeting people like housewives, students. Okay, and the amount that they're paying is not that big. I was thinking that they're going to pay two students, for example, at least if I were to rent my car out, I need like 500 ringgit a month. So that's something big amount that can help me out in terms of my if I'm a student lah. Tapi the one that we check, it shows that they can easily give up their account or their debit card to these scammers or to these fraudsters with just mere 50 ringgit one-time payment. So it is really surprising how desperate our students are in terms of getting money, with of course without knowing the implications of giving out their account credential as well as their debit card, for example. Okay, so this is the message I want to tell to everyone, at least in this session. The next following slides, I'm not going to go through, but you can read on your own once you have it. This is to download our app. If you're not a customer yet, you can download and gain benefits out of it. The next slide is showing what are the account opening procedures, which is very easy to do. The following ones are showing the promotions that we have. We have tied up with the companies for promotions, and then these are all promotions, but which I'm not going to go through. Okay. All right, so we have come to the end of the session.
Oh, thank you very much, Cik Sharul. There's one question from Nur Shaidah on whether it's also because you on the awareness that you mentioned just now, you cannot even give the card to your son, right? So
Yeah.
how about in terms of sharing your ID or password to family members? Because in case something happened to you, and then maybe the family members can access the account. Is that also considered a wrongdoing?
Ini soalan perangkap ni. Of course, as a person who is handling compliance, I would say cannot, definitely cannot, to share passwords and everything. Okay, I can pretty much understand the requirements, or rather talk about compliance perspective. Of course, it is not allowed, and please don't do that. But I know for sure that on the grounds people are doing it, simply because sometimes to manage case of disease, meninggal kan. So anyone who basically maybe the parents ke apa ke yang meninggal, then it becomes very difficult for them to take up the money. So that's the reason why sometimes bila their parents becomes at an old age, they require the credentials that we call it, the account credential, the login credentials, which is not allowed actually. And just for your information as well, I'm not too sure about which bank, but there are banks, including digital banks, that basically have an real-time checking of whenever you want to do transactions. So say for example, digital banks especially, if you sign up with them, you have that video, live witness video test and so on, your selfie kan. So the moment you do transactions up to a certain amount or limit, then it will detect your face immediately when you do the transaction. So imagine if you are not the account owner, you are doing it on behalf of your parents ke apa ke, then that transaction will not go through. Okay, it will be paused, and that will be checked by someone at the back, and you will receive a call, or rather the account owner will receive a call. Are you doing this transaction? Because it looks like not you doing this transaction. So that kind of things is already in place by some banks. That to caution you lah. Okay.
Okay, thank you very much. Can we just open for one more question from the participants who wants to ask directly? Anyone? All right, maybe one question from me, Cik Sharul. I think in terms of especially readying, because we are from educational institution, in terms of readying our students and our graduates in this digital era. Maybe you can share some thoughts on what more can we do in terms of the improving the quality of human resources in for people who want to be involved in the industry, especially. Maybe you can
Okay.
share some insights for that.
Maksudnya macam preparing the students lah, basically to
Yeah.
join the workforce and all.
Not only the students, I think even for the lecturers as well. We need to
Lecturer dah pandai lah.
to be some of us, we need to keep up, with this new technology. Yeah.
Okay, I think that one also is relevant to all of us lah. Basically in the banks, especially when you come to an age where you see all other people surrounding you are much younger than you, but yet you are in digital bank, so pelik sikit lah kan. So the thing is, the technology keeps on changing. Okay, the digital landscape is something that evolves and changing at a very rapid pace. So last time I used to hear people saying, this like 10-15 years ago, if you're out of the banking industry for 2 months or 3 months, then you are lost. Okay, let's talk about banking industry. But now I would say if you are not in the loop of the cloud native or digital natives for even 1 week, then you already lost a couple of things, because it keeps evolving. So you see the market share of technology stocks are also really the highest contributor. So I would suggest that, of course, besides researching, googling and whatnot, reading, potentially there are also some short courses being offered to understand digital better, to understand digitalization, to understand how the world is evolving into a different era altogether. Not only talking about technology in terms of financial, but also talking about, say for example, automation in aviation, in for example vehicle, macam EV and everything, right? So that is a change of landscape in a big scale. And if we are not keeping up with all this, then come to a point of time that we are not being only left behind, tapi we cannot really appreciate what's going on. Okay, like for a simple example is, I know that majority of us, or maybe all of us, are using touch and go in this one way or another, right? To pay for tolls, to pay for parking and whatnot. So I also understand that you must already appreciate that the Zing card for touch and go ni will be terminated very soon, right? It will be terminated. The one that you link with your credit card, dia akan jadi expired lepas ni, tak ada dah. 15 years, I've been using it 15 years ago, and then suddenly, like 2 years ago, I received a notice from early last year for the bank saying, we're going to terminate this in the next 2 years, so you have to find other ways. So that is the thing that is forcing us. What are the ways? I'm already used to using touch and go card with automatic reload from the credit card. Suddenly, I have to go and manually or using NFC to basically reload my card. Macam, manual rather than automatic. Apparently, there are other ways. Of course, they are pushing us to use RFID and whatnot, where there is an automatic reload and everything from the e-wallet. So those are small things that happens in our daily in our life. So we have to just embrace it and then go through with it, and I would say appreciate it lah. Then only we can actually equip ourselves. As a student, you can equip yourself to understand what's in the market, and easier for you to basically use all this technology, ChatGPT lah, DeepSeek lah, everything, for you to enhance your functions and whatever you're doing in your life daily.
Okay, thank you very much, Encik Shahrul. I think we can conclude the session for today. I extend our heartfelt gratitude to Mr. Asharul for sharing his valuable experience and insights. And I believe today's discussion has provided us with a deeper understanding of the challenges in Islamic Digital Bank and the approaches that AEON Bank is implementing. So thank you very much, Encik Asharul, and thank you very much to all participants for your participation. And we look forward to your involvement in future IBF events, inshallah. Asharul, there's a request to share the slides. Is it okay if we can share the slides as well?
Boleh, no
for
problem.
the participants. Okay, inshallah.
Yes.
So we will send the slides to the people who registered to the event, inshallah, after this.
Alright.
And with that, I think we can end the session with the tasbih kifarah in Surah Al-As. Subhanakallah wa bihamdik. Asyhadu an la ilaha illa anta, astaghfiruka wa atubu ilaik. Wal 'asri innal insana lafi khusr illa alladhina amanu wa 'amilus salihati wa tawassaw bil haqq wa tawassaw bis sabr. So thank you very much, everyone, and we wish you a blessed Ramadan, inshallah, and hope to see you again in the future, inshallah. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.